G. Smith is here. G. Smith is clear. Welcome to the community, thriving on our unity. G. Smith is here. G. Smith is clear. Welcome to the community, thriving on our unity. Let's go. 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 G. Smith is here. G. Smith is clear. Welcome to the community.
Yo, welcome to the G. Smith podcast. And I'm your host, Mitchell Goldsmith, aka BOM Boom. That's me, Booker Mitchell. I write music, I do music. Been doing it for a minute, but tonight's not about me. It's the G. Smith podcast, and I got with us today, man, I'm so excited to have my friend, my boy, Mark Jones is in the house. Now listen, before he gets started, Mark Jones is a visionary entrepreneur, and he's a dynamic CEO of White Fox Ventures Incorporated. That just happened, y'all. It's amazing. Not only that, that's my boy. He in Georgia, and he is the CEO of a it's a Georgia-based company, a financial services company, rather, called Invest Tank. We're gonna talk about all of that in just a few minutes. I need y'all to put y'all hands together. Like whatever you gotta do. Say, what's up, Mark Jones? Welcome to the G.
Man. Thank you so much. Thank you so much, my brother. We've been knowing each other forever.
How are y'all rich people doing? How y'all doing, man?
Man, I'm telling you, we feeling good over here because you are part of us.
Oh, that's what I'm talking about. Yes, sir. I know it when I see it. Yes, sir. Yes, sir.
Yeah, man.
Listen, man. I'm excited about having you on here, man. Listen, before I get in,
I am honored to be here with you. Thank you so much for the opportunity.
Yes, sir. Yes, sir. Thank you, man. Yeah, man. No problem, man. You graced us with this podcast, man. We talk about music. We're gonna talk about finances. We talk about religion. Man, yeah. It's so many parts of me, and I want to talk about it all at the G Smith podcast, man. So we're gonna jump into it, man. Listen, let's start with Invest Tank. Let's start there, man. Like, what is that? How did it get started? Like, what's that?
Yeah, so Invest Tank came about. I worked and built Ron Isley's liquor company. I started working with Ron Isley from the Isley brothers, and we needed something to where we could hold the assets, right? And so I was riding down the street one day and trying to figure out a good name for the company, and then something happened, and the Lord said Invest Tank, and I said it. I said it like Invest Tank, and my wife, Kim, she was like, "What are you saying?" Because we were talking about a whole different thing, and it just came about Invest Tank. And so Invest Tank is a company. It's a diversified company where we go in, we help build infrastructure for companies and things of that nature, and it allows early stage companies to raise capital, and so that's how Invest Tank came about, and so. We built that company so that we could help artists, we could help entrepreneurs, really build and raise capital.
Gotcha.
And that's one of the major problems that most visionaries and have is it's not that the vision doesn't work; it's their ability to access the capital markets.
So I noticed you said artists, right? Opportunity to help them. So let's kind of unpack that a little bit. So let's say I'm an artist, producer. No, I'm an artist. I'm a singer, right? I got music out, I'm working on. So how does that benefit an artist? Let's say you are a singer. So how would Invest Tank, or what they would need to be a part?
So what happens is most artists they look at their asset as being the songs, or their assets being the music itself, but really it's the content. I mean, you're doing this right now, and it is the content. But
Right.
what happens is most people don't understand infrastructure. And so it is not that the music isn't good when people invest. It's their ability to get out of their position. So the investor talks about returns and rates of returns, and you got cash on cash and internal rates of return and all these different things. But what happens is the creative person can't very few. Well, I ain't gonna say very few, but there's it's hard for them to talk to those investors so that they understand it's two different worlds. Like
Right.
investors look at tangible assets, right?
Mhm.
Tangible assets. If this deal doesn't go well, how can I liquidate that? And then artists think about the creativeness. So investing kind of blends the two. So
Okay.
so in other words, if you have the content or the creative, I'll help you to put together the infrastructure and then license your content to the company, and the company, whether it's an LLC or corporation, then that company can actually raise money because the asset is condensed. The IP that's in your head can condense down to a contractual form, and then now that gives an asset to the company so that the company can raise money.
Gotcha. So I talked about being an artist. So
Mhm.
um, those that may not necessarily be singers
Right.
or producers in that same vein, or filmmakers. Is that
Right.
all of that? Okay.
Yeah. So Mitchell, you and I, boom, right? Boom, Commissioner, boom, Mitchell. You and I grew up as musicians, right? And so we grew up in the church, right?
Mm-hmm.
And so you and I had a discussion some time ago that God built everything once, and then He put the seed in it for it to reproduce,
Mm-hmm.
right? And so what happens is in the music business, in the music business, a lot of times the artists do not understand how to reproduce.
Okay.
Reproduce. When I say reproduce, I'm not talking about from a musical perspective, but I'm talking about from an infrastructure perspective.
Mm-hmm.
And so every artist got great ideas. It's hard for them to articulate that to investors to where they understand it.
Mm-hmm.
So I
So
don't know
Best Tank is like they help with the language when you're talking to investors.
Yeah, so we help out with market capitalization, understanding pre-money, post-money valuations, common stock, preferred rates of return. I mean, we do all of that, and the reason we do that is because the the investor has to must understand how they're going to get the return of the money before they get the return on the money.
On the money. Gotcha. So, I think so. You have a link. Is there a link for Invest Tank where we can put up?
Yes. Yep.
Yeah, I'll
And
make sure to get that info. Yeah, definitely.
okay. Yep. I'll get that to you.
So yeah, man, that sounds exciting, man. And it sounds like a great opportunity, especially right now for independent artists. I'm sure you've been keeping up with a lot of the acquisitions that's been happening, man. The last couple of months, man. I don't know if it's exciting or it's a sign of something, because man, it's been a lot. It's been a lot going on, man.
Right. Yeah. So a lot of times when you're purchasing, being in the space of raising money or being in the space of acquisitions, a lot of times you're looking at the cash flows of the business, what it does. So a lot of artists are selling their catalogs and stuff because
Mhm.
money comes in dribs and drabs, and a lot of times you can utilize a bulk of that money to be able to purchase other assets that you want to use. So, for
Mhm.
example, um, um, when we just talked about the seed, right? We talked about the seed and how we created one time, but the seed reproduces itself, right?
Mhm.
Well, what you have to understand in business itself, when you create the seed itself, right? When the seed is produced,
Mhm.
that seed goes in and it constantly is making money, constantly making money
Mhm.
from a royalty perspective to so many different things. And so when you're looking at a business, you're looking at the overall growth cycle of that business. And so, but I got into this when I was really young, man.
Right.
Yeah, I got into it when I was very young.
Yeah, man, you ain't no novice to it at all, man. And just watching you uh collect information, man, and keep moving up higher and getting more information and moving up higher. Man, it's an honor, man, to know you, Doc. And
It's an honor to meet you, to
yeah,
you as well.
so we talked about it, Invest Tank, and I'll definitely put that link up,
Mhm.
and so people can go in, check it out, and find out
Mhm.
what they need to do, right? Uh,
Yes.
but I talked to you a couple of months ago, man, and you was excited about something that I didn't know what it was. I just saw your name,
Yeah.
Bloomberg.com. And I was like, oh,
Yeah.
that Mark, yeah, with a
Well,
K.
no,
Oh
I
yeah.
don't even know how I got there.
Oh no, I'm gonna tell you how you got there. See, what happened was
Yeah.
you are now the CEO of White Fox Ventures Incorporated.
Yep.
That
Yep.
is major, man. Like that's major. So I don't know how much of that you can talk about. Like you're the CEO of it at this point.
Well, I can talk about a lot of I can talk about it.
Okay.
And so what happens is that when investors put their money in, there has to be an exit strategy.
Mm-hmm.
And so a lot of the companies like Amazon and you know Twitter and all those companies and those companies are what we call publicly traded. And so what happens is that you get 10x on the valuation of a company.
Mm-hmm.
So for example, if a company's net profits is or the company's valuation is 10 million, you can get 10x. So now you're at $100 million valuation. But publicly traded companies allow companies to be able to trade. So let's go back to the Bible. So um, Solomon was the richest man in the Bible,
Mm-hmm.
right? But back in the day, so I'm gonna give it to you from a biblical perspective.
Yes, sir. I love it. I love it.
So what happened with Solomon is was the richest man, and it said because of his wisdom, right? But also it was because of livestock. So back in the day, they would call it chattel. They
Right.
call it livestock, oxen and cow, livestock, livestock, livestock.
I
So if
got
you look at the richest people in the world, they have livestock.
it.
Their
Mm-hmm.
stock is trading on the exchange. Why? Because it creates what we call liquidity in the marketplace.
Mm-hmm.
And it allows investors to get out of their position because investors look at earnings per share. So I invest $1 today, and it values tomorrow at $2. And you buy, you sell, you buy, and you sell, and as you make acquisitions, the value of your portfolio goes up, which increases your market cap and which increases the valuation of your company.
So a lot of that knowledge and um, verbiage, right? We've discussed over the years.
Mhm.
How did you use that leverage to get into purchasing White Fox?
So what happens is, so in the Bible in Luke 19, it says he gave one 10 talents, and then he invested and said, come back, but well done, thy good and faithful servant. He came back with 10. He said, I'm gonna make you a controller over 10 cities. Go take charge over 10 cities. Then the other one got 5, and he said, hey, I've invested the 5. And he said, great, got good and faithful servant. Go take control over 5 cities. And then the other one that had it, and this is in Luke 19, he said, hey, I knew you gave me 1. I didn't know what to do with it, so I hid it up in a napkin. And what they did was they took from the one that did not know what to do with it and gave it to the one that did it.
Mm-hmm.
Right. So my point in saying that is I learned all of my strategies through the Bible. So let's go back to your question. You asked how was I able to acquire White Fox.
Mm-hmm.
So I was speaking at an event, and someone came to me and they said, "Mark, we have a publicly traded company that's not really, we're not really doing the way it needs to do, and we would love for you to come in." I asked a few questions because I wanted to have an understanding, right? And so there's 4 elements to learning, in my opinion.
Okay.
There's faith. Faith is the substance thing that's hoped for, the things that you cannot see.
Right.
Then it moves from faith to belief, and belief is a little greater than faith, but you still not sure. In other words, Mitchell, we're riding in a car, and that looks like, I believe that's the spot right there that we saw,
Gotcha.
but we're not sure if that's it. So it moves from faith to belief, and then from belief to knowledge, right? From belief to knowledge. And knowledge comes when we make mistakes. And, I got kids and you got kids. And so we would tell our kids, hey, I wouldn't do that. I tried it and it didn't work.
Right.
So we got the knowledge of it. And then it moves from faith to belief, from belief to knowledge, and then from knowledge to wisdom. So had I listened to my parents when I was younger, I would have bypassed all the mistakes. And because they already had the knowledge, I would have gained wisdom. Right.
Mm-hmm.
So with White Fox, I understood that White Fox had a low market cap, and I understood that there was a huge upside potential in White Fox.
Mm-hmm.
So what I did was I actually acquired the controlling block, and then I was able to understand and control the voting rights of the company, which gives me the direction of the company and where it needs to go. Now I still have a board of directors that I answer to, but the most part is I wanted to understand how to control the company. And so going back to Luke 19, it says, go take authority over 10 cities. The Bible never said that you would own it. It says take authority.
Take
And when you take authority, you control it. You don't necessarily need to own it. I'm gonna say this to your congregants, to your people. A lot of times what happens is we always want to own stuff. And when you own it, I can take it from you.
Mm-hmm.
When I control it, you can't take it. So, for example, Donald Trump doesn't own his plane. His company does. He controls it.
Right. And
so the average person, when I say this is real. Poor and middle class, and I'm only talking about a mindset, not a financial. Poor middle class, they make their income, pay their bills. Make their income, pay their taxes, and then pay their bills. Rich people make their income, pay all their bills, then pay their taxes. That's why they always say the rich don't pay any taxes. That's why Donald Trump, because he doesn't own anything, he controls it.
So to that point, man, so I've been married 29 years now. As
Long time.
29 years. I don't know why she's still with me. Bless her. So whenever I talk to young couples, right, and I'm gonna give you credit for this because I springboard off of hearing you talk about finances, money, and ways to move, right?
Right.
So I always tell them, I say, listen, y'all getting ready to get married, and I know y'all want to spend 15 grand, 20 grand on this wedding.
Mm-hmm.
But hear me out. If both of you are making $50,000 a year, if you can for 5 years live off of one of the salaries and save the other salary, you have $250,000 sitting in the bank, right? Or whatever engine you decide to use. Now you're in the game to start investing, because like the average person, middle class or lower, you didn't got 2 grand, 5 grand when a investment opportunity shows up to be able to take advantage of that. So I was sitting there, and I got about a few couples, man, that are doing it, and they like, man, I'm so glad.
Right.
But it's the mindset. I'm addressing the mindset. I had that understanding when I was 23 when I got married. Obviously, by now we'd be sitting in a different space financially, but when you don't have the knowledge, or you don't listen to gain the wisdom, right? You don't know, man. So I'm so proud of you, man, for Invest Tank. You talked to me about like literally, I think before, and I think White Fox you mentioned like early on last year, but it was still kind of like a couple of things. But man, when I saw that it came through, I reached out to you, man, and we talked about it. But I want to get to a couple of questions, man. We're a little bit into it. So, and we're talking about obviously you inquired, not inquired, acquired White Fox, right?
Right.
But when you evaluate a company to purchase or invest in, what signals tell you that this is a hidden opportunity rather than a risky gamble?
So the difference between a gambler and an investor is a gambler hopes, right? And they don't have any they don't make calculated decisions. An investor makes calculated decisions based upon the facts that they have, and they make informed decisions.
Mm-hmm.
So when I look at an opportunity, I look at the opportunity based upon what my overall outcome is. For example, if I'm buying it to hold, then I would buy it at a certain price point, and then I would buy it from an income approach, right? So I would pay max price for something if uh, I would get revenue off of it. I always say, I'll give you your price if you give me my terms. In other words, I can pay $1 billion for something. $1 billion is not a lot of money if you got the right terms.
Mm-hmm.
So let me give you an example. If you go to a Ferrari dealership and say, I'm gonna buy a Ferrari, and they say it's $300,000. Well, the average person don't have $300,000 to pay for that Ferrari.
Right.
So what they say is, I'll get financing and I'll get it over time.
Mm-hmm.
$300,000 is not as a big a burden if you can make the payments on it.
Right.
Now, if I'm going in and I'm buying a company that I want to break up and then sell off, or sell my equity in it, then I'll buy it at a certain price, a lower price point, so that I can get out of the position. Because think about it, 10% rate of return on your money is 10%. So if I went in and paid something for $1, maybe a dime, then I still made 10%.
Mm-hmm.
It's just the risk factor in how I want to structure the deal. So a lot of people think that you have to have a lot of money in order to invest. You don't.
Right. That's exactly what
For more content and to enjoy this full interview, join us on our Patreon page. The link is below.